5 things that will make you a better stock investor. Now, if you're new to stock investing and you have difficulty, you want to do your own stock selection, right? Because remember, many people, not all people, because it doesn't make sense for everyone, but for a select few of you are interested in making your own investment decisions, which makes a lot of sense because it's your hard-earned money. And no one will take care of it better than yourself, right? And so stock selection, it's a very valuable skill, being able to analyze stocks, being able to select stocks, right? And it's not easy. It's pretty straightforward, but it's not easy to get to a position where you have the skills, where you can select stocks by yourself. But if you can do that, but if you can develop the skill, then yeah, it's a very valuable skill, right? So in this video, I'm going to help you guys do just that, right? To help you develop the skills. Not 100%, of course, because stock selection, it takes time to be able to develop the skills, but yeah, it's definitely a small step towards that goal, right? To become a better stocks analyst or better stock investor, right? So, and remember, in this video, I'm going to focus on the income statement, right? Because remember, the most valuable thing, one of the most valuable skills you can develop as an investor is to be able to read and interpret the 3 financial statements, right? That is the income statement, the balance sheet, and the cash flow statement. So in this video, I'm going to focus on the income statement, right? And in the next 2 videos, I'll also make 2 follow-up videos. One focusing on the balance sheet, and the third focusing on the cash flow statement, right? So when it comes to the income statement, and remember, income statement is basically your revenues and expenses, right? Revenue minus expenses, that's the basic format of the income statement, where the income statement is showing a company's financial performance, meaning how much revenue has the company generated over the last couple of months, or maybe the last year, and how much has it spent, right, over the same time period. So that's what the income statement shows. And of course, and then when you net them out, that is your revenues minus expense. When you subtract your revenue, when you subtract your expenses from your revenues, you will come up with profits or losses, right? That's going to be specific to any specific company. Now, so so in this video, I'm going to focus on the 5 things that you can focus on in the income statement that will make you a better investor, right? So let's start off with the first one, which is revenue growth. Okay. So when I'm analyzing companies, this is one of the first things I look at. Okay. By the way, revenue is also called the top line. The reason is because everything flows down from the revenues, right? And if a company is not making enough revenues, then that is not enough, meaning that it is not able to cover its expenses. Then that company is going to end up in losses, right? And of course, if that is the financial performance of the company. If the company is making less or negative profits, or which is basically losses, then the stock price is going to take a hit, right? And so one of the most important things to focus on is your revenue growth, right? How much is the company able to increase, or at least maintain its current level of revenues, right? So what I like to do is I like to look at how do I check the growth. It's very simple, right? I basically look for companies which have at least a 10-year track record. Okay, the company has to have a 10-year track record. Now, if the company is relatively new, uh, and it's doing really well, I might give it a chance. But normally, I like to invest in companies which have a strong track record, right? Because remember, and yeah, many people will tell you, hey, just because the company has been making money in the past, it does not mean that it's going to keep doing that in the future, which is true to a certain extent. But remember that Warren Buffett has also stated on many occasions that history might not repeat itself, but it rhymes. Okay, that this is a very important point to remember, that if a company has been making money consistently over a decade, because remember, I like to look at companies which have at least a 10-year track record, and so the chances are high that the company is going to keep making money in the future, unless something fundamentally has changed. That is true, but so you got to check that, right? And that's the trick. So, but keeping things simple for this video, check the revenue growth. Okay, so what I like to do is I like to take the let's say I'm looking at a 10-year track record of a specific company. I'll see how much has the company grown over the 10 years on average, right? And to do this, you can use the CAGR, or the compound annual growth rate formula, okay? To do this, you can simply go to your Google browser and just type in CAGR calculator, okay? Your compound annual growth rate calculator. And you can just go to any site and just plug in these two numbers, right? Which is your beginning revenues, which is basically 10 years ago, and your current revenue, which is the last year's revenue, and just plug them in, and it's going to ask you what is the number of periods. You just plug in 10, right? Because it's a 10-year track record, and you just press calculate, and you're going to get your compound annual growth rate, right? Now, CAGR, very simply put, is basically on average, how much has the company been able to grow its revenues over that time period, right? It's a very useful formula, CAGR formula, right? And so so the first is revenue growth, right? Now, once I've seen the revenue growth, next I'm going to go to the operating income growth. Okay, operating income is basically another line item on the income statement, right? Operating income or operating profit. Now, operating income is, and remember, the formula is simple. Of the format of the income statement is simply revenues minus expenses equal to profits or losses, right? So, the first line, the first point was revenue growth, and that's the top line. And then I start looking at different types of profits, right, on the income statement. Then if you go to, which is basically, so if you go a few line items below the revenue number on the income statement, you will see your operating income, okay? And so calculate the revenue growth for operating income then, right? Operating income is going to be basically your gross profit minus your operating expenses, right? Which are normally your sales, general, and admin expenses. So once you subtract these two, you will get your operating income or operating profit, right? If you're looking at the company's financial statements, the official financial statements, you don't need to calculate it. It will simply be given. So you just take those two numbers, that is the operating income from 10 years ago, and your last year's operating income, and just plug them into the CAGR formula, right? The calculator, and you will get your CAGR compound annual growth rate. Okay. Now, after this, once you've seen the operating income, and by the way, if you are wondering how do you evaluate whether the revenue growth, operating growth, and the another growth that I'll just explain in a minute, how to tell if it's good or not, I just stick with me till the end of the video, and I'll tell you how to find out what is a good number. Okay. So operating revenue growth, the first point you look at. Second, you look at operating income growth, right? And then you look at the net income growth, net income or net profit. Of course, this is called the bottom line. Okay. The revenue is called the top line, and of course net income is called the bottom line. because that's what the company keeps after all your profits, taxes, and interest expenses, right? So that's what you get. Now you're gonna do the same thing for net income. Net income, right, is net income growth is again, you take your beginning period's net income, and then you take the latest year's net income and you plug them into the CAGR calculator, compound annual growth rate calculator, and it will give you your growth number, right? So that's the first three things that you need to do when you're analyzing or evaluating a company's income statement. Next, we look at the margins. Okay, the first three things that we just discussed are growth numbers. Okay, in which you get in which are basically how much are the revenues, operating income, and net income growing by how much percentage points, right? Then you also got to look at the margins. Margins are basically very simply put, it's basically for example, if you're looking at the operating margin, it's basically your operating income as a percentage of revenue. Okay, so for example, if the company has made $100 in revenues and the operating profit on the income statement is, let's say, $40, that means the company's operating margin is 40%. We got this number or this percentage by dividing the operating income by the revenue number, right? When you do this, you get your operating margin, right? So you got to calculate that, okay? And you can also do you can just look at the last year's number but I actually like to do this for the whole 10-year period, right? And you will see if the margins are improving or declining, right? Preferably, you like to see the number going up. If it's not going up, you at least like to see the margins being maintained, right? And if they're going down, then you got to find out why are the margins going down. Okay, so that's basically your operating margin. That's the fourth point. And finally, the last thing that you got to check on the income statement, which is net margin. Okay, this is basically your net income divided by your revenues, right? So basically, let's say the company under review is basically generating for every $100 in revenues, the company generating $20 in net income. So the net margin would be 20%, right? You simply took the net income and you divide by the revenues, right? And then of course you multiply it by 100, so you get a net profit margin, right? So that's what's going on with the margin. Now, the last thing before I end the video, I'd like to point out that because I'm going to keep the video under 15 minutes, because some of the platforms limit the video duration to be less than 15 minutes. So I'm going to keep that under 15 minutes. And so I'll just point out the last point, which is basically that you got to remember to compare these numbers, right? So the revenue growth, the operating income growth, the net income growth, the operating margin, and the net margin with other players in the market. Meaning, if you are let's say I'm looking at the cement sector, right, in Pakistan. So for example, I'm looking at DG Khan Cement, right, and I'm looking at these numbers for that specific company. Then I'm going to look at its major competitors, and I'm going to compare all these 5 numbers with the major competitor, with its major competitors. For example, Lucky Cement, right, and Maple Leaf Cement, and so forth. That's just to give you guys reference, right? So that's basically something which you need to keep an eye on. I hope this video helped, and stay tuned for more videos on investing, right? Take care. Bye-bye.